Hey everyone, welcome back. So here's something nobody really wants to hear. Your government probably isn't working for your financial freedom. I know. That sounds cynical, but stick with me here. Because what I'm about to show you isn't conspiracy theory, it's just history. Governments love talking about stability, growth, opportunity, all that good stuff. But when you actually look at what they've been doing for centuries, it's a completely different story. They've been using the same financial tricks over and over again to keep ordinary people broke while funneling wealth upward. And the wildest part, these aren't new tricks. They're ancient, just repackaged with fancier names. So let's break down exactly how this game works. Let's start with the simplest and oldest trick in the book, inflation. Here's the setup. A government needs money, maybe for a war, maybe for some massive project, doesn't matter. They've got two choices. Option one, raise taxes. But that's political suicide, right? Nobody votes for the guy who raises their taxes. Option two, just quietly make the money worth less. Print more of it, or back in the day, mix cheaper metals into your coins. Same money, less value. And boom, you've just taxed everyone without actually raising taxes. Ancient Rome, masters of this trick. In the 3rd century AD, Roman emperors were burning through cash trying to defend the borders, pay soldiers, keep the machine running. So what did they do? They started messing with the denarius, that's their silver coin. At first it was almost pure silver, but over time, they kept adding more and more copper. Eventually, you had this coin that looked like silver, but was basically just copper with a thin silver coating that would rub off in your pocket. The government acted like nothing changed, but everyone holding those coins, they got screwed. Prices skyrocketed. Your savings became worthless. Your wages couldn't keep up. It was a silent tax. You never saw it coming, but you definitely felt it. And here's the kicker. We're still doing this today, just with central banks instead of imperial mints. All right, let's jump to the Middle Ages. Different era, same game, just a new move. Back then, kings needed money constantly. Wars with neighbors, fancy palaces, king stuff. But they couldn't just tax everyone into oblivion without risking rebellion. So they came up with something clever. Forced loans. Here's how it worked. The king would go to wealthy merchants and guilds and say, "Hey, I need to borrow some money." For the kingdom, Very patriotic of you. Except it wasn't actually a request. Refuse. You'd get fined. Your property might get seized. Maybe worse. Sometimes the crown promised to pay you back with interest. But guess what? Repayment came late, in devalued currency, or not at all. The trick here was brilliant. It wasn't called a tax. It was a loan. Sounds so much more voluntary, right? Except it absolutely was not. And it worked for centuries because people were too afraid to say no and too hopeful that they'd actually get paid back. Spoiler, they usually didn't. Now we get to the 17th century, and this is where things get really interesting. In 1694, Britain created the Bank of England. Sounds official, right? Like some noble institution built to serve the people? Nope. It was created because the government was broke and needed money to fight France. Here's the deal they made. Wealthy investors lent money to the government by buying bonds. In return, the crown promised to pay them interest, guaranteed, backed by the government. So where did the money for that interest come from? Taxes. Specifically, taxes on everyday goods like salt, beer, cloth, stuff ordinary people bought. Let me walk you through what's happening here. Rich people lend money to the government. The government pays them interest. That interest comes from taxes paid by regular working folks. It's a wealth transfer system, plain and simple. The wealthy get a safe, guaranteed return. The poor pay higher taxes to fund it. And this wasn't some accident. This was the design. This same pattern still exists today. Government bonds are considered one of the safest investments in the world. Who buys them? The wealthy, pension funds, banks. Who ultimately pays the interest? You do, through taxes. Fast forward to today, and the tricks are everywhere. Let's talk about deficit spending. Governments rack up massive debts. They issue bonds. Investors, banks, foreign countries buy them. Politicians tell you it's for infrastructure, jobs, schools, social programs, things that sound good. But where does a lot of that money actually go? Defense contractors, corporate subsidies, bailouts for industries that made bad bets. And when it's time to pay the bill, governments don't cut spending at the top. They raise your taxes. They inflate the currency so your money is worth less. They cut social programs. The debt looks like it's for the people, but the burden always lands on your shoulders. The profits? They go to the bondholders. Then we've got bailouts. Oh man, bailouts. 2008 financial crisis. Remember that? Banks made reckless bets. They bundled toxic mortgages into securities and sold them like they were safe. The whole system nearly collapsed. Who paid for the cleanup? You did. Taxpayers funded massive government bailouts. Who came out on top? The same banks. They emerged bigger, more powerful, more concentrated than before. The trick was simple. Privatize the gains, socialize the losses. When banks win, they keep the profits. When they lose, you pay the bill. And they told us this was necessary to save the system. But whose system were they really saving? Let's talk about pensions and retirement savings, because this one's going to sting. For decades, people in the US, Britain, across Europe, they've been paying into government-run pension systems. Social Security, national insurance, whatever it's called in your country. You pay in trusting that when you retire, the money will be there. But here's the dirty secret. Governments don't actually save that money. They spend it immediately and replace it with IOUs. The promise is that future taxpayers will cover the cost when you retire. It's basically a Ponzi scheme dressed up in official language. And it works, until it doesn't. When populations age, when there aren't enough young workers to support retirees, suddenly the system is unsustainable. Then what happens? The government reforms it. Translation. They cut benefits. They raise the retirement age. They inflate away the value of your payouts. Notice the pattern here. At every stage, the trick relies on perception. Inflation is called growth. Forced loans are duty. National debt is investment. Bailouts are stability. Pension cuts are reform. The language hides the reality. Wealth flowing from the bottom to the top. In recent decades, these tricks have only gotten more sophisticated. Let's talk about quantitative easing. QE for short. Most people had never even heard this term before 2008. So, what is it? Central banks create trillions of dollars out of thin air. They use that money to buy government bonds and mortgage-backed securities to stabilize markets. And it worked for the financial system. Asset prices soared. Stocks, real estate, bonds, all of them went up. But who owns most of those assets? The wealthy. For the average household without major investments? The benefits were minimal. The downside, distorted markets and rising costs of living. The trick here, money creation saved the system for those at the top while fueling inflation and inequality for everyone else. Then there are stealth taxes. Governments don't want to raise income taxes directly because people hate that, so they tax you in ways you don't notice. Sales taxes, fuel duties, and most of all, inflation. When prices rise faster than your wages, that gap is effectively a hidden tax on your purchasing power. Governments love inflation because it reduces the real value of their debts. But for you, it erodes your wealth. You might feel richer because your salary number is bigger, but if your costs are rising faster, you're actually getting poorer. This isn't a bug. This is the system working exactly as designed. Let me hit you with two more quick tricks. First, regulatory capture. On the surface, regulations sound great, right? They're supposed to protect you. Financial rules, safety standards, consumer protections. But here's what actually happens. The biggest companies in an industry end up writing the rules that are supposed to regulate them. Railroads in the 1800s, oil companies in the 1900s, tech and finance today. They all shape the regulations in their favor. They get loopholes. They lock out competition. They increase their profits. The public sees protection. The insiders see profit. Second, war finance. During World War I and II, governments issued massive amounts of bonds and told citizens it was their patriotic duty to buy them. And sure, people were supporting their country. But those bonds also became lucrative, risk-free investments for the wealthy, guaranteed by future taxes. Fast forward to the 21st century. Trillions spent on wars in Iraq and Afghanistan, financed through debt. Who benefited? Defense contractors, banks, bondholders. Who paid? Taxpayers. For decades. The trick is that wars are sold as temporary emergencies. But the financial burdens? They last generations. Here's one of the most insidious tricks. Complexity itself. tax codes thousands of pages long, financial instruments so complicated even professionals can't explain them, government budgets filled with jargon and hidden line items. All of this creates an environment where you can't possibly track where the money is going. Complexity becomes camouflage. When you can't see the transfer of wealth happening, you can't fight back. In ancient Rome, it was obvious when your coin had less silver. Today, it's buried in balance sheets, acronyms, and obscure programs. But the trick is the same. Make it too complicated for regular people to follow, and the wealth transfer can happen right under your nose. So why does all this matter right now? Because these tricks are alive and accelerating. Inflation is eating your savings. National debts are growing larger every year. Bailouts are still the go-to solution whenever markets wobble. Central banks keep manipulating the money supply. Governments pass costs onto you in ways so indirect you never connect the dots. The result? A system designed to keep you working harder for less real wealth, while the financial elite grow stronger. And here's the brutal lesson from history. These tricks always return. When Rome debased its coins, citizens suffered. When monarchs forced loans, merchants lost fortunes. When modern states inflate and borrow, households bear the burden. Different eras, same mechanism. And here's the really harsh truth. Most people will never escape these tricks because they don't even realize they're being played. They think inflation is natural. They think taxes are inevitable. They think bailouts are acts of mercy. They believe what the government tells them instead of studying what actually happened in history. And that ignorance, that's the most powerful trick of all. When people forget the past, they can't recognize when it's repeating. That's why governments prefer a public that doesn't understand finance. Financial education is resistance. Economic history is a weapon. If you know the tricks, you're harder to manipulate. So what should you take away from this? First, always look beyond the headline. When governments announce stimulus, ask who profits first. When inflation rises, remember it's not just bad luck, it's policy. When new regulations appear, ask who wrote them and who benefits. Second, build real wealth outside these traps. Hold assets that can retain value even when currency doesn't. Don't put all your trust in systems designed to benefit someone else. Third, never assume the system works for you just because it says it does. Systems exist to protect themselves, not you. History doesn't repeat exactly, but if you don't understand it, it will crush you all the same. The financial tricks that kept Roman citizens broke are the same ones draining your bank account today. The only difference is the packaging, and whether you recognize them in time. If this gave you a new perspective, hit that subscribe button. History has all the answers. You just have to know where to look. Thanks for watching, and I'll see you in the next one.